To follow along with the content of this episode, use the link in the description, or go to t45finance.com/equity to download a copy of the Theta 45 Equity Valuation Report. At Theta 45, we can value any company listed on the stock market for you. Our equity valuation report is simple to read and easy to understand, with clear and concise information that will empower you to buy shares in a company at the right price. Theta 45's equity valuation method uses a discounted cash flow model that values a company based on the opportunity cost of investing in an alternative financial security over a 10-year investment horizon. For companies whose stock is traded in the U.S. stock market, their value is compared to a risk-free product, such as the 10-year U.S. Treasury bond. The aim of the Theta 45 equity valuation method is to tell you if you are at least making as much money from investing in this company than a risk-free investment. Every report comes with a fact sheet that explains our valuation method and why we use particular variables to value a company. The main report contains everything you need to know about the value of this company on one single sheet. The head of the report contains the company information, including the share price it was trading at the time of the report. Cash flow history shows the free cash flow generated by the company over the last 4 years, and any quarters reported in the current financial year. The first step in the valuation process is to project the free cash flow the company is predicted to generate over the next 10 years. As predicting the future is impossible, Theta 45 uses a very conservative projection to build in a margin of safety to ensure that you are buying this company at a cheap price. What matters is the total cash flow at the end of the 10-year investment horizon, and not how you got there year to year. The question now is, how much value do you place on an asset that is predicted to generate this total cash flow in 10 years? Theta 45 compares the value of this company against 4 alternative assets by applying 4 different discount rates. The discount rate is the minimum rate of return required by the investor to compensate them for the opportunity cost of investing in an alternative asset. The first and the lowest discount rate used is the risk-free rate, which in this example is the current yield for the 10-year U.S. Treasury bond. We add a risk premium for the second discount rate to compare the value of this company to a corporate bond, preferably one that is issued by the same company and with a yield with 10 years left to maturity. In cases where the company has not issued a bond, we would use bonds issued by a similar company or with a comparable credit rating. The third discount rate tells you the discount rate the company is currently trading at. This valuation is useful to compare the company's value over time or against another company. The fourth discount rate can be used to compare the company's value to another bond or to another company. Theta 45 uses these 4 discount rates to calculate the present value of this company. The first valuation uses only the risk-free rate as the discount rate. This is the maximum price you would pay to buy shares in this company. The second valuation adds a risk premium to the discount rate and compares the value of this company to a corporate bond. Adding a risk premium adds a margin of safety to your investment. Finally, the bond cash flow table allows you to compare the free cash flow predicted to be generated by the company over the next 10 years to the coupons receivable from the bonds over the same investment horizon. By reinvesting your coupons every year, you could generate the same total cash flow by investing in these bonds instead. Tap on the blue button in the footer to view a video on the theory behind Theta 45's equity valuation model. Tap on the YouTube link to view our other videos on the stock market and finance. And if you are a day or short-term trader, press on the App Store or the Play Store icons to download our app on your iOS or Android devices. Would you like Theta 45 to value the equity of a company? Go to t45finance.com/equity and follow the directions to fill in the Theta 45 equity valuation form. Day traders make a profit by buying low and selling high. But how do you know the price is low enough to buy, to give you the best chance of making a profit? Maximize your chances of selling higher with Theta 45, a complete trading strategy for day traders. Theta 45 is an algorithm that uses the science of probability and real-time artificial intelligence to forecast the next closing price. The strategy is simple. If the price drops below the prediction before the market closes, the signal to buy strengthens. Conversely, if the price rises above the prediction, the signal to sell increases. The aim is to be in and out of the market no later than the end of the next trading day. Create your trading plan before the market opens. Download Theta 45 from the App Store now.